Welcome to The Explainer. Today, we're digging into three huge fintech stories that, when you put them all together, tell one single, bigger story about where the entire industry is headed. We're talking about what's next, what's actually working, and, well, what's just not going to fly anymore. It really all boils down to these three words: the future, a comeback, and a whole new level of accountability. These themes pretty much define the state of fintech right now. So, what do they actually mean in practice? Let's get into it. So our first story is all about the future. And it's about a partnership that honestly feels completely inevitable. It's a huge clue showing how AI is about to become the new way we all manage our money. Okay, so you've got two key players here. On one side, there's Plaid. You might not know the name, but they're the quiet, essential infrastructure company. And on the other side, you've got Perplexity, one of the hottest AI startups on the planet. Really, just think of it as the pipes meeting the brain. And this quote just nails it, right? Plaid isn't the shiny app you tap on every day. Nope. They are the reason those apps, like Venmo or Robinhood, can even connect to your bank account securely. They're the invisible plumbing of the entire financial world. So what happens when you team them up? You get something they're calling intelligent finance. And the idea is actually super simple, but wow, is it powerful. You're letting a brain like Perplexity access all your financial data through Plaid's pipes to give you real, actual answers about your money. For years, personal finance apps have promised us these deep insights. But what did we mostly get? We got push notifications like this one. They told us what we already did, but they hardly ever helped us figure out what to do next. It was kind of helpful, but it wasn't truly intelligent. This is where we see the huge shift. We're moving from asking what happened to what should I do? These are real decision-making questions. And instead of you having to open like 5 different apps to figure it out, an AI assistant can just analyze all your data instantly and give you an answer that reflects your actual financial life. So here's the crucial point, the big takeaway. As AI assistants become the main way we interact with our money, the apps themselves might start to matter less. The real power? Well, it lies with the company that owns all the data pipes underneath it all. And right now, that's Plaid. Okay, next up, let's shift gears from the future of fintech to a major comeback story that's happening right now. And it's a story that proves there's still a massive appetite out there for the right kind of fintech company. That number, around 20%, that represents the first-day IPO pop for PayPay. They're a Japanese mobile payments giant. So what does that mean? It means its stock price jumped 20% on its very first day of trading on the stock market. In a tough market where a lot of tech IPOs have kind of fizzled, a jump like that is a very strong signal that investors are still excited. But look, this success wasn't just some random fluke. PayPay was founded back in 2018 to solve a really specific problem. Japan, despite being super tech-savvy, was still a very cash-heavy society. PayPay saw that opportunity, and they absolutely seized it. They followed this crystal-clear 3-step playbook. First, they targeted that unique cash-based market. Second, they pushed QR code payments like crazy, using cashback rewards to get millions of people and merchants on board. And third, they expanded from just doing payments into a whole financial ecosystem. And the success of this IPO sends a really clear message to the whole industry. The window for fintech companies to go public, it's not closed, but the standards are way, way higher. Investors want to see real, proven scale and a business model that clearly makes money. And that brings us perfectly to our final story, which is a powerful reality check for everyone. This is the accountability piece, and it's a reminder of what investors demand once a company is public. First off, let's just wrap our heads around the scale here. We're talking about the robo-advisor Wealthfront. They're a huge player, managing nearly $94 billion in client assets. So yeah, this is not a small startup. They have massive adoption. But here's where they ran into a problem. Their revenue for the fourth quarter, the money coming in, it actually beat Wall Street's expectations. That's the good news. The bad news? Their earnings per share, which is basically their bottom line profit for each share of stock, it missed. So they actually lost more money per share than analysts were predicting. And in today's market, that miss on the bottom line was all that mattered. The stock fell after they released the report, even though their revenue growth was strong. This right here is the huge shift. The era of growth at all costs, where you could just pile up users and promise to figure out profits later, that's over. It's done. For public fintech companies, accountability is here, and investors demand a clear path to sustainable profits. So when we put these three stories together, the future, the comeback, and the reality check, we get this remarkably clear picture of the new rules of the game for the entire fintech industry.
Here they are. Rule number 1. The future is all about AI becoming the new front end for your finances. Rule 2. Going public is still possible, but only for massive, proven ecosystems, not just promising little apps. And rule number 3. Accountability is king. Once you're public, profits matter more than pretty much anything else.
Which leaves us with one final crucial question to chew on. In this new, more mature era of fintech, what kind of company is really best positioned to win? Is it the one that owns the pipes, the one that builds the entire ecosystem, or is it the one that simply masters the art of making a profit? Something to think about.